on my output, dude, being patient as a motherfucker, getting that input, grinding, understanding that money, success is a lagging indicator. So hustle, do what you have to do on the input, and then let by natural law, which is a principle that applies to the universe, right? Action causes reaction, input causes output. Focus on what you can control, being patient about becoming great, and the rest will play out.
And my personal question to you is, why not you? You've got the brains, you can make decisions, you can study the plan, you can change your life, you can grow immensely in the next few years, you can make your dreams come true, you can build a financial wall around your family nothing can get through, you can become healthy, you can become powerful. Why not you?
Success is the only revenge. As you expand, they shrink into irrelevance. As you get louder, no one can hear them. You don't beat them, you cast a shadow so big, no one can see them to begin with. When people copy, they copy the wrong stuff because they don't know why it worked to begin with. And when it breaks...
Amazing day, family. Amazing day.
So don't sweat it.
Amazing
Copycats will always be
Amazing day,
behind.
brother.
To yourself, man. You're not getting out there and squeezing that f***ing soul out every day. Yeah. If you grind hard, man, I got time to worry about your monkey. I ain't got time to worry about you, man. Because tomorrow, I got to go back to the grind. And tomorrow, I got to go back to the grind again and again and again and again. I don't have time to put you into the hate bank. There's no hate. It's all filtered out, man, through the grind. People don't get it. There's great joy in the grind. Great joy in the suffer. It totally cleanses your body out, man, of any kind of hate. Makes you grow up. This is all about the quitting mind. So what's the quitting mind? So
this morning I'm going to take you through how I took a 1 to 10 trade this morning using this strategy. Very, very clear, very, very simple trade. And like I said to you, if it was the case that this was the only play that you have up your sleeve, then this play is supposed to be able to make you be successful and be able to do certain things, all right? So let's have a look.
Jake, if you was going to choose one pair to do, like just do that for the meantime, what would you choose?
I'm here with GU at the moment. So through my journey, I moved from pairs to pairs. I'm not going to lie to you. Once upon a time, I was love of US 30. Then I was trading from US 30 was kind of US 30. I'm here with GU at the moment. Yeah, so GU, Great British Pound against the United States dollar. If I was to tell you one pair, I'd say start there. Start there, be there, and let's experience that. For a few reasons, you're dealing with the Great British Pound, so you're dealing with, we're in the UK. Time zones are comfortable. We understand when London session is. We understand you're not trading a pair that's predominantly weighted outside of the United States pair, US dollar, or outside of, obviously US dollar is the behemoth, okay? So, whatever that's happening there, that's what's moving the markets, that's what's doing stuff. But obviously, the other side of that coin, at least you have some insight into it. You have some understanding of fundamentals that are happening in Great Britain also. Do you understand what I'm saying? If I said to you, go and start trading USD MXN, and you need to know what's happening in the Mexican peseta, well, so I'd say GU, and that's where I am right now, to be perfectly honest. I like GU and EU. GU and EU, but they're very, very similar, okay? They're like cousins. Obviously, we know that we had a separation in Brexit, okay? But they are still cousins, okay? Now let me pull up, oopsie daisy. Let me pull up, if I show my last story, let's close that. Let me pull up our, which I didn't update yesterday, apologies. But let's pull up our guide, okay, which is a clear and simple guide and a good outline for anybody here to be able to say this is how they'd like to take trades. Now I'm going to say it one more time. It's fantastic, maybe it's fantastic, if you have and know, 55 different entry types and 55 different ways in which you can get in and out of the markets. Yeah, that's great. Okay. And in your experience over time, you will see more things that you're able to trade You'll see more ways that you're able to get in the market. Why? Because you've seen it before. Yeah, you've been there, done that, got the t-shirt, and you've seen it many times. Okay, but if this one way, in regards to being able to understand this play I'm giving you, this playbook. Now let's have a look at certain things. We understand that regardless, yeah, we need to understand the bigger picture of the market, regardless. But that doesn't necessarily help, especially newbie traders, to be able to take a trade when you're sitting down at the charts. All right, it gives you an overview. It lets you have an understanding of what's happening in the markets. Okay, but let's imagine you understand that I've spoken to you guys and I've told you this thing. All right, identify high probability trade times. There's kill zones 7 and obviously New London session, New York session. You've understood that. So therefore, guys, in the mornings, you know, I'm on the charts before 7 o'clock. Okay, sometimes you guys come in and you know, you'll see me. What I try not to do is, if I'm ever late to the gym, I do try not to be on my charts whilst I'm in the gym. It's a difficult habit sometimes because I know I want to be on the charts, but if I'm late in the gym, sometimes I start looking at my charts whilst I'm in the gym. I can't lie to you. All right, I'm trying to fix that so I don't do that anymore. Okay. However, if I said to you that this yellow box, which is 7 o'clock, start of London session, there is always an opportunity that we look for there. I'm going to put it out there and ask you guys, what is that play? Does anybody know what that play is that I'm looking for? Yeah, in my key, you know, my power kill zones. Like, what am I looking for upon London Open or New York Open? Let's go. Let's see if anybody's had a little read of this.
Is it the liquidity of the Asian high or low?
Okay, great. So that's a good starting point. All right. So a good starting point is, first and foremost, I need to identify where there is liquidity. This is me showing you guys that overall, we understand how to trade. If we was going to go and make an investment, okay, we understand that we want to buy in a, you know, discount and sell in a premium, okay? And that's exactly the same going all the way down the boards into very small time frames. However, there are certain things that we can look for to take advantage of the markets. And the first thing is we want to see is, look, for example, this is this morning. I've woken up this morning. I look left and I've identified exactly what Jason just said, that bottom of the Asian session range over here. And therefore we say that there is liquidity below this V bottom, right? If I get out of this 1 minute time frame, look at it on a 5 minute time frame, look, the market was coming down here like this, brrr, red candles, red candles, red candles, red candle, boom. Something happened here that pushed these candles all the way back up here, breaking previous structure. Something happened here. We cannot deny that. Whether it's in the Asian session or not, something stopped price from just keeping on falling down here. This becomes a level whereby retail traders and other traders see this area as a strong area of support. Okay? Now the Asian session gives us our frame. It frames the potential of what could happen in the next session. Yeah, I'm going through right now, for the people that just come on, how I took a 1 to 10 trade. And I'm not so happy about the fact that it's a 1 to 10. I'm more so happy about the way in which I executed the trade exactly to the plan. All right. So it wasn't exactly a 1 to 10 trade. It worked out to be 5%, but in fact, a little bit more than that because I scaled in. But we're going to show you how, and so that you can do it time and time and time again, because I'm going to say it one more time. If this is the only play that you know, this play alone should allow you to be profitable in the markets. Okay. So I'm looking at this market and I'm telling you for free. I'm going to say it one more time like I've been saying. I overall want to be selling GU. Okay. On a larger time frame, I believe that GU, have a look, is in a premium up here. No, sorry, let me go again. Let me change that. Let's go to a 4 hour. GU has actually moved into a slight discount of this larger range, but from a premium area that I believe this market should be turning around. I'm going to show you what that premium area is. It's this line. Okay? Have a look. It's that line. Now, though I believe that, I believe is true, and we've tapped into it over here and had a reaction, that doesn't necessarily mean that it's giving me all the information I need to take a trade today when I'm in front of the charts. Because look, that blue line is where? All the way up there. I don't know if this market decides, you know what, Jay, I just want to go and revisit that line again before we make, I don't know if this market wants to consolidate before deciding it wants to make a bigger move and start pushing in the opposite direction. I really and truly do not know. Have a look. If this market wants to come down to see this impulse, this is a bullish impulse in an overall bearish range. Really, I'd love to see this market start coming down here, breaking outside of the range and breaking structure. And that means that bigger picture energy of, I believe we're coming from this bigger premium, starts to play out. But in the meantime, in between time, whilst I'm here in front of my charts, I need to understand what I want to do today. And therefore, this here allows us to some comfort to understand how we can get in and out of these trades. Forget about the bigger picture. I told you so, the market's going to go down, and then 3 weeks later the market starts to go down and you go, aha, told you. Well, that hasn't helped you make £1. And what helps you make £1 is understanding where the liquidity is and how these markets work. Okay, so the liquidity I identified this morning was down here below this Asian session. All right, I'm on my 5 minute time, I'm on my lower time frames because I'm trying to get in and out of the market. I made my 1 to 10 before you guys got on the call. All right, got on the session. I watched this market at London Open. I'm watching it all here. I'm probably up about 6 o'clock, 5:30. I'm up. I'm having a look. I'm seeing this market staying within this area of this Asian session, pushing all the way down here, and then what a coincidence that as soon as the London session started, okay, we saw this push down here, all the way to this point here. Bearing in mind the liquidity is up here. We saw the push down here capturing liquidity. Now I understand that the market captures liquidity, and the metaphor I've used is when it's deciding that it wants to go on a journey and it needs to come and collect nam, yeah? Needs to come and collect some provisions. 2 Lucas, a bottle of water, you know, some strong boots, yeah? A cheesy beef patty, for whatever you guys need to keep it moving because you're going to make a journey. But when it grabs that liquidity, I want to see, and let's go back over here. I understand that I'm identified. Look, first and foremost, I understand the overall market direction. I understand premium versus discount. Yeah. Then I look for identifying higher probability trading times. London session. I want to find the areas of liquidity. I just showed you the Asian sessions with liquidity where I identified. I want to see a leg out structural break. Yeah. I'm looking out for a break of the last high before the lowest low. Yeah. And only prepare for a trade when that structural break occurs. So when I see this market come down here, the last high before the lowest point is here. The market legs out of here with strength and speed. 1, 2, 3, 4, 5, 6 minutes of big green candles that even not only broke this structure, but actually broke the opposing leg. And if we can see here, what type of break of structure is this? Because we see it here on our next step, what I'm looking for. I'm looking for a manipulation pattern. So a break of structure, guys, when I say break of structure, you should always think to yourself, a break of structure is going to be a W or an M. Just think about it. Just think about anything. If you're going like this, a break of structure has to be like this, right? Breaking this structure. And this forms an M. And vice versa, if it's going in the opposite direction, a break of structure, this forms a W. But not all W's or M's or breaks of structure are made equal. They need to be in the right location, first and foremost. And ultimately, I want to see a manipulation M or W, meaning not an M like this, so not a W like this. Yeah? Whoops, I don't know what kind of W I'm drawing there. Yeah? Or not an M like this. In an ideal scenario, I want to see a manipulation M, which is like this, or a manipulation W, which is like this. All right? In an ideal scenario, that's what I want to see. So when I'm looking at this trade here in the morning and I see a manipulation W right as my London session starts, right after capturing liquidity, you do not have to tell JJ twice. I've taken the clips, I've put it in the gun, I've loaded it, I've taken it off safety. Yeah, I am ready to go because I've seen this. Boom, leg out within my London session after capturing liquidity. Yeah, I also understand indication, correction, continuation if I want to have that entry. But let me show you my high, what I showed you in the strategy is in here. There is an indication, correction, continuation because I'm looking at the imbalance. When that leg pushes out, it creates an imbalance. Imbalancing. If I rewound this, have a look so you can see it in real time. When I'm watching it and I've seen that market grab liquidity, then I've seen boom, that happened in a beautiful break of structure W, manipulation W. I'm looking at the point that broke this structure here. Don't get twisted. There's imbalance all here, but I'm telling you, I'm giving you the source. You'll say thank you afterwards. Yeah, that at that point where the structure was broken in here, that little white line, can I see imbalance in there? Yeah, that is a key area. Now, sometimes the market doesn't come down to that. Yeah, sometimes it might just come down a little bit and go. There's many reasons for that. Maybe your candles are slightly off. Maybe the way you're looking at it from your broker's candles are slightly off. Maybe the market just wants to come back later, which it can do. It might start making a run. You think, oh, I missed it. And then later on, you see, whoop, into your little area, then it goes again. But either way, that I'm telling you, I'm giving you the source. That area that was broken, more times out of 10, the imbalance, if there's an imbalance that exists, or there's a candle that exists, that imbalance that candle that broke that level, wherever that imbalance goes all the way down to, that is a target. That is an area whereby you say, that is where I want to get an entry. Now, to be aggressive, if you wanted to be in an ideal scenario, an aggressive entry would have been you turning around and saying, yeah, just below that candle that broke and closed the imbalance, that's my aggressive entry. All right. A safer entry is one of two things. A safer entry is placing your stop below this swing low here, the shoulder of the W, or waiting for correction and continuation. And maybe that entry would be, move this out of the way. Maybe that entry would be after the market comes back and closes back above the correction. Sorry, the indication, the correction, the continuation closing above this level here. There's a safer entry. But I'm saying to you, when we're so small in a 1 minute time frame, if you want to leave it, you could even take it as a limit order. This could have been a limit order. All right, because it happened so quickly. You've seen it break, you place your limit order. This could have been a limit order. Yeah, because you say, you know what, Jay, I want to get some wins under my belt. I'm going to place it below that swing low. Then we watch the markets, have a look. Remember what I said to you? We have our play. I even made you a shiny PDF to outline the play. Okay? If I see the play happen and everything playing out, I have to pull the trigger. I have to be in a position whereby I understand trading. I understand there's no risk without reward. I must take the trade. So I'm ready. I'm not going to lie to you. I'm lying on my chest. I've got my sniper gun out. Big hollow points, clips, bullets are loaded. I'm waiting for my shot. And I don't have to wait long, because this is a play about taking trades today. This ain't a play about remember, the overall energy about this GU is I really want to be in a sell for GU on a bigger picture. But right now, at 7 o'clock, trying to get in and out of the trade in minutes and make my money, I'm waiting. I am in the trade now. I have been triggered into my trade. Okay? And like I said to you, an aggressive entry is placing your stop below where that candle's action is, where that candle, the candle that broke the structure is below that candle. Even if the imbalance was, I don't know, higher up, you want to go below the actual candle that did damage. Because you know what it is? On a smaller time frame, 30 seconds or 15 seconds, you might see imbalance get quite deep in there. So you want to place this stop below that candle. That's the most aggressive entry. Have a look. Just covering the imbalance, the aggressive entry, high risk and high reward. Then there's a medium risk below the last low, ideally below the wick of a bullish or bearish engulfing candlestick, which is fair risk and fair reward. And there's low risk below the swing low. Now let me show you something for this GU. GU, this here is only 1.3 pips, the aggressive entry. But the joke is this, the safest entry below this swing low is only 3.26 pips. If you want to add spread time, you know, spread times 2, maybe 3.5, 4 pips. But let's just keep it there for examples, for example purposes. 3.26 pips. Let's have a look. Let's go. All right. Now I'm still drawing my trend lines. I'm still drawing my ranges. I still understand what's going on. However, I understand that even though I want to be in this market for the sell overall, what do I mean by that? I mean, I can go to sleep on it, go Dominica and come back and that's in more profits. Yeah, go sleep, go about my day, do my other working day. That should be in more profits on a bigger picture if I've got the bigger picture correct. But if I'm talking about getting in and out of a trading thing today, right now, I have to understand where liquidity is and how the markets want to move. So when I see this beautiful break of structure manipulation W at the point when markets just open, after just taking the liquidity from this Asian session low over here, this is everything I need. And I go, you know what, Jay made me a shiny PDF outlining the exact same thing. Yeah, then I have the ability to say I must get in the trade when, and I've given you the source. The source is this, that candle, if this was one big candle, cool, you cover the whole range. This candle that breaks the structure is definitely a point of view. I've seen it so many times. Yeah, but like I said, this is the aggressive entry because I only take into consideration the imbalance. And this is the, in this instance, there's only an aggressive and safer entry and safest entry. The middle one, in fact, there is a middle one. So this is more say a medium entry if you really want to go there, because on a 1 minute time frame the imbalance is just here, and I suppose you could say that this little level here is below a bit of a low. There's a little high here, a little, I don't know. There's between. It looks like there's an aggressive and very low risk entry here. These two, the middle one's a bit iffy. All right, doesn't matter. Yeah, you're not going to place your trade. You're not going to look for a middle one. You're going to place it between one and the other. And in my opinion, if you haven't got a lot of wins under your belt. Yeah, if you haven't got a lot of wins under your belt, there's nothing wrong with taking this trade here for 3.6 pips. My goodness, so what are you looking for? All right, let's have a look now. So that market's now done. Once I've seen this confirmation that I found a zone which was 1.2 pips that was respected, I now understand I'm correct. I'm right now. Okay, so then what is it I'm looking for? I'm looking for a target. The target, have a look. You must understand where you will take profits, liquidity zone, structural highs or lows, or 1 to 10. Remember, after every new high, markets will always want to retrace. I'm going to zoom out now, or even before I've got in the trade, and understand, look, the markets came from here. And over here is a swing high. And it's the top of Asian session. I think that this market wants to at least reach for that target. Have a look. I've got target. I've got entry. I've got stop loss. Let's have a look at that. Let's drop down to our 1 minute time frame. See what's going on. All right. So, that's another position that I've got running. I'll tell you about that in a minute. All right. So have a look. Lovely jubbly. Now, let's go to our we made it very clear that when this market gets to a 1 to 3, that I'm going to roll off 50% of my profits, which is called taking partials, and I'm going to make this trade totally risk-free. So if that was the entry, at this point in time, I'm already in the market risk-free. If I took the larger entry, not quite yet. All right, not quite yet. Yeah, but this zone was beautiful. I'm in this trade risk-free. But my target, have a look, is over here. Why is it over here? Because here is an area that we've seen that there is liquidity above a swing high. I'm targeting that location, and I'm going to get myself out of that trade if I get to my 1 to 10, or if I see that liquidity has been taken. Okay, let's go back to our 1 minute time frame. Let's have a look. Let's watch the trade. Boom. Even when we start coming back down in this direction, because you guys understand indication, correction, and continuation. Let me say that one more time. Because you understand indication, correction, continuation, even when we've seen this on a 1 minute time frame break this structure, it's not end of the world. We're like, that's just an indication. It hasn't corrected and continued to give us any stress. So even at this point in time, I'm calm. I'm in this risk-free, I'm up in profits, and the market's coming back against me. It doesn't matter because my target's up here. Yeah? My target is up here. All right, let's go. All right, moving. I'm drawing my range in so I can understand where my ranges of this market's trading within. So I can see how the market's trading within this range, like so. Yeah, so that's giving me a little guide also whilst the trade's going on. And I'm calm. I'm calm because I took that trade within my risk. I'm calm because that trade was right within my playbook, and it's currently going well. All right? And it's currently going well. Let's get rid of some of these. This is just distractions. Okay? But my target is still over here. Let's go. We're making progress, and we're breaking some smaller highs, which also above these little highs will have some liquidity, and we may see some reactions. But my overall energy is still, I'm reaching for my target. This session wants to go and take out liquidity. Delicious. We've seen over here, that is my target. And if you have a look over here, that is a 1 to 10 trade. Now, it's not a miracle. It's not miraculous. It's not nothing. It's follow the plan. Yesterday was like, I said to you, yesterday was a bit mad. The markets didn't look too great. They looked a bit ugly. And there's a couple of energy where man kind of maybe forced a little plays. But the reality is, you don't need to force no plays when it comes to the markets. All right? You need to wait for what you're looking for and simply, and simply execute. This is what I'm trying not to do as well, which you guys should stop telling me off for, all right? I'm trying to manage my trades whilst I'm talking, all right? Etc., all right? But this, we got exactly what we was looking for and we executed our trade. I'm not happy, I'm not over the moon and trying to stunt that it's a 1 to 10. I'm over the moon that this is a perfect trade as per that playbook that I've given you. Now, there's many other ways we can get into a trade, and I know many other playbooks, and we've told you some other ones. But this is one that because I was hearing some people's issues, that they understand how to do larger market structure, they understand premiums, they understand this and that, but they don't know when they should get in. They don't know why they should get in. They don't know what time they should get in. Now I've solved that. We're only trading in this yellow box or the blue box. The New York session, London session within a kill zone, New York session within a kill zone. Okay, cool. So we've solved that. All right. What is it I'm waiting for? What makes a better trade than another trade? Well, if you see a manipulation W like this, And this W could have turned up anyway. Yeah, this W could have turned up anyway. Maybe we would have already seen, maybe this W was over here, already grabbed liquidity before the session starts. But then you saw this, you saw when the market started, it came down and tapped into that area. Well, take your entry, bro. Maybe this W turns up over here after London session happens and grabs liquidity. And then, well, then there's your entry over here. This whole kill zone is to play. But when I see it happen on the open, like on the open, the W says, okay, we're ready to turn up. We're ready to give you the confirmations you need, bro. Right now, well, I'm not ramping. I'm waiting for the price to return. Okay? And when price returns, I can either get in via market execution, a candlestick pattern to confirm the change of direction, indication correction continuation on a smaller time frame, which is quite small. So therefore, or limit order. What's missing here is me saying market execution. A limit order, a preset order based upon the zone. This particular entry was a limit order. Why was it a limit order? Because I'm on a 1 minute time frame, and this little movement down here, zoop, into this area could have been very quick. Could have been like zoop and then gone. So I made it a limit order. I made it a limit order around this zone. Yeah, that's what I did. And the markets came, kissed into that order beautifully and reacted. Went up and have a look, took that liquidity. As soon as it took that liquidity up here by this little wick above this little level, we've seen a reaction. Yeah, we've seen a reaction from here. But either way, I'm out of the trade. I'm good. I've made my money. So like I said, all we want to do is get good at being able to identify this. Okay, let's try and backtest. I was speaking to somebody and they said, oh, they can't backtest because they haven't got the right account yet. They haven't paid for TradingView. Guys, in my opinion, look out for when they've got offers. Okay. However, if you are serious about trading, then you need to be able to have some sort of account here. Yeah. That's the up and down of it. If you're serious about trading, you're going to need your trading account. All right, you're going to need something to be able to turn around and be like, I can backtest. And how do you backtest? Well, you open up your charts, okay? And let me delete some of these lines so we can clean things up a little pace. Delete the lines, 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 delete the lines. You can go as well. I don't know what that is. You can go as well. You can go. How do we backtest? I'll get rid of this as well. Is we go to our daily chart and we rewind the charts a few candles. Okay, I've rewound the charts a few candles. Let me show you something, because obviously I've been showing you things on a smaller time frame. All right. What can we see? I want to make this so it's like, so this is a daily time frame, yeah? But I'm just showing you on all time frames how the play works. Can somebody tell me what I'm alluding to of what I can see? I remember asking it before and somebody said to me out loud, I can't help but see it.
A manipulation M.
This is on a daily time frame, by the way. Yeah, and just like Jason just said, I can see this. This is what my eyes can see. Look. Don't know about you, but that's what my eyes can see. But let me show you something even sweeter. Let's zoom in, because we need 3 candles for an imbalance. This area, I said here, what did I say? I said, I'm giving you the source. The area of that middle bit of the M or W where the break occurs. Can you see an imbalance in there? And for damn sure, before that green candle appeared, yeah, this area, this gap, this displacement was of interest, man. That area was like, bro, I'm interested to see what happens when that market kicks back in. And this is on the daily time frame, because I know someone's thinking, oh, Jay, look at things on a 1 minute time frame. It's the same on all time frames. I would just like to get my money, because I know at 7 o'clock in the morning, when London people sit down at the table and start hitting the buttons, volume comes in to make the thing do what it needs to do. And New York, when man sit down at the table in New York, when New York opens, volume comes in, not necessarily for us to hit the button, but for it to start painting the picture it wants to paint. But look, that middle point, once again, that areas where the market comes and retests in here and then starts having a reaction. This is a daily candle. So this, like, the reality is look, this distance from up in here to down here is a big, this is moving. This is moving. Now, ultimately, if this is correct, based upon us being in a premium on this big blue line, ultimately, I'm hoping that this market is going to come down here and try and capture some liquidity on a much bigger time frame. Oh, look. Oh, look. Seems to be doing that. And that's on a daily time frame. Yeah? So don't get twisted that to say that this thing here is just about 1 minute time frames. This is a play. Yeah, this is a play. It's just helping us because obviously we don't want to sit around for 6 weeks waiting for a trade to play out. Yeah, we want to be able to get in a trade and get out of the trade. We want to be able to get in and out of a trade, you know, today, because we're day traders and we're learning as well. So we ain't got the time to sit, like we're not going to learn anything by sitting around for 3 weeks to take one trade. But I'm showing you. This should jump out to you all day long. Let's get back to our back testing, how we back test. We said that we go and we rewind, we scoot back a few candles. So let's just scoot back, I don't know, to about here. Now, it doesn't even matter that I'm on a daily time frame right now, because ultimately I want to see whether or not when I sat down at my desk, I'm able to take a trade today. Yeah, today. So if you can see here, this is gonna be Monday the 22nd, all right, a week ago. Yeah, and actually I said a week ago. I must have scooted back even more than what I thought it was, all right? So, see you later, gorgeous boy. Sorry guys. All right, so I'm here and I'm looking at this chart for argument's sake. I'm looking at it. Let's try and get to, because this is saying it's Monday, all right? Let's try and scoot things forward. So I want to go and see whether I can scoot things forward. All right, that's Asian session in here. All right, Asian session. Let's rewind, sorry. So I'm on the hour time frame. Let's go back a little piece. Let's go from here, no problem. No, let's go back a little piece, sorry. Asian session in here. Let me drop my time frame down. Cool. So I'm looking at this chart and I can see that, remember, I'm still going to do my analysis. I'm still going to understand where I am. I'm still going to be able to go, wait a minute. This looks like, somebody knows. This looks like this box. What does it look like? What do the markets look like that's going on right now in this box? Does anybody know?
Sideways.
Looks sideways to me.
What's that, consolidation?
Looks like consolidation to me. It doesn't look like it really knows what it's doing over here. All right. Now, the reality is this. I don't need to trade consolidation. So even though I'm doing my back test, that doesn't mean I'm ready to hit the button here. It just means that the market is consolidating and I'm not in no consolidation hype. Cool, no problem. Let's wait and see. Okay, let's see what happens now. We've seen the market break outside of here. Now, what this is being the market doing something now. All right, cool. Now let's have a look. Again, I want to start at the top of the day because I don't want to just cherry pick it. Let's go here. Asian sessions over here. On a bigger picture, we've seen the market indicate We've seen it correct, and it's starting to continue over here. All right. Now, based upon that one play, because there are other plays, as you guys know, all right? Asian session is here. We're asleep. It's 1, 2 o'clock in the morning. All right, the Asian session has created this range here and broken structure. On a bigger picture, we've actually seen it indicate, correct, and not quite. On the 15 minutes, not quite, because we haven't seen no closure of candles, not quite continuous yet. Can you see that? See how we're combining our knowledge, our understanding? Yeah? We're combining our knowledge and our understanding of what's going on in the markets. Okay? I'm looking at this here. All right? And I can drop my time frame down to a 5-minute time frame. So I'm watching it. It's morning time. The markets
Does that
push.
look like a W too?
It does. On a bigger picture, it did. All right, but we want to watch it first because we want to know. We want to get involved, you know, at our kill zone. But it does, yeah. But we want to get involved at our kill zone, and which is about here, and see what's happening about this time. I'm watching it. Okay. So over here, we've seen this market here, kind of trading within this range. Now I want to look either side of this as well. All right, because remember, this is just Asian session range, but what about the previous ranges? What about what's happened historically? Because that still gives us data, gives us information. All right, in this instance, I'm having to go all the way back here, but look, I can see, I'm going to put in some lines, liquidity below here. And I'm also going to put a line at the top of this structure here of a previous high that was broken. All right. And, you know, you can continue doing this and going down and identifying these areas. This is exactly the same as this indicator. The only issue is not issue. The only thing is at the moment, this indicator is only showing me 3 sessions back. If I made it show me 300 sessions back, you'll see lots of lines and stuff come on the screen. Pow. And now it's showing me some other areas. Look, it's showing me London session low over here, which we could have done by eye anyway, because there was some liquidity there. And then we see another Asian session. These are all levels of liquidity. Here we can see a big old imbalance, yeah, between here and here. Big old imbalance. So we're still analyzing the charts and understanding what we understand. So right now we've seen this market, have a look, close, this indication correction continuation here, and we have to look at it from a bigger picture also, that we're in the top of a range and the market's made an indication here, breaking previous 4-hour structure, corrected a little bit, then it's continued, breaking some more structure, closing in imbalance. But we can see all of these concerns up in here. We can see some concerns up in here, imbalances. All right, but either way, let's get down. I just wanted to do that so that we was up to date in regards to the higher time frame Russian though. So we've seen here that London session is just about to start. And we've seen this market dipping back into a little area over here. All right. Now, on the larger time frame, I think Jason was like, is that a W that I can see? All right. Now, it's good that he's identifying them. On this 15-minute time frame, have a look over here. The issue is that this is a big old like structure in here. It's the big thing is the time frame. So we're not going to take this big 15-minute structure from Asian session. It's unnecessary. All right. We want to be seeing that what's happening, something's been formed, and we want to first and foremost understand that we don't want to do anything until liquidity has been taken. All right. We don't want to do anything until liquidity has been taken. And remember, that may mean that we don't do anything. Let me say that again. That may mean that we don't do anything because we haven't seen the liquidity taken first and haven't seen what we've been looking for. All right. Now, if you have a look over here, if I go drop my time frame down, I'm going to show you something. Either way, no, I'm not going to show you that. It's too small. All right. So look, we're watching it. Just play it forwards. What is this market doing? All right. So now this here, remember, this little situation started happening of it going down here and grabbing some liquidity. was already in this Asian session. This is all still Asian session. Yeah, all still Asian session. When 6 o'clock opens, they call it Frankfurt, you know, opening. Okay. And then 7 was London. But this here is an area of liquidity. It is over here. But I can also see quite close this other little red line here, which is another bit of liquidity previously. You see, that's why I went back historically and identified those levels. Okay. So I'm watching it, seeing what happens. I can't just jump in on the basis that it's gone down. I need to see what I look for. Let's have a look on a 1 minute time frame. We've seen the market go and grab some liquidity now. Yeah, grab liquidity from below this wick here. And we've seen quite an aggressive reaction from there. All right, so let's knuckle in. See if I've missed something. So I was scooting forward on a 5 minute time frame. Grab liquidity over here. Now for me right now, looking at it, I can't see a very clean, clear breaker structure W, manipulation W. I cannot. I cannot. It's not very clean, not very clear. Okay, and definitely can't see no displacement imbalance, but I can see a big reaction from here. All right, cool. So that might be you watching it, thinking to yourself, we've grabbed liquidity, Jay, and I haven't seen it yet. All right, you haven't seen it, you're not in the trade. This is where the discipline comes into play. Doesn't matter if this goes to space right now. If you haven't seen it, you are not in the trade. And I personally, are not on this 1 minute time frame, can't see it. I'm gonna go to my 2 minute, have a look. I don't even really love it on a 2 minute. See, on a 2 minute time frame, potentially, no, I don't love it. I'm not gonna force it. It'd be nice to find one from this session that is textbook, but if we don't see it, we don't see it. All right. So I'm watching it. This market's here. This is why we don't get in, because we didn't see what we needed to see. Yeah. We stay calm. We stay looking at we trust in our strategy. The market pushed up here, looked like we was going to leave us. We've seen a big push in the opposite direction. You see me flicking through the different time frames. I'm just trying to build up a better picture, because I was concerned about this other liquidity, and it looks like the market wants to take that liquidity. Yeah. Which is taking both of those liquidities now, because why wouldn't you? If you was doing supermarket sweep and you saw the PlayStation there and you saw the controllers just on the other aisle, you might as well take both of them, right? You're not gonna go just take the PlayStation and get home, you've got no controllers. You're gonna take everything, whatever's closest to you, you're gonna take that liquidity. So let's have a look, see what happens. Yeah. So, you know, looking here on, I'm looking through the time frames. Do you have a breaker structure W? It's not the way I want to see it. It's not like that manipulation W. All right. And I'm looking, because I'm going to have to, let me get out of here. I want to be able to see also how the candles look. All right. How the candles look. All right. Now for me, it's still not giving me what I really want to see in here. Even though we've seen a lovely push out here, displacement. Look, that push has gone all the way back up to here, and have a look. Where's the other zone? Well, the other liquidity zone's over here. Have a look. You see? So now on a short term, even though I was looking down here to get an entry, if I haven't managed to get an entry and I see the market pushing towards potential areas of liquidity, maybe there's an entry in the opposite direction. Maybe that might be the play for today, that some liquidity and exactly what I'm looking for I see on the opposite side. You see my point? My point is, even though we have an overall bias, depending on what you want to do, execute in a trade on a smaller time frame, if you want to do it on a smaller time frame, it's all about where's that liquidity and have you seen what you need to see to get in. That's what it's all about. Okay, let's play this forward, see what happens. It's pushed up, it's captured liquidity from above this level. Okay, but also more importantly, significantly, it's pushed all the way up to the top of this Asian session level. So what am I thinking now? I'm thinking to myself, okay, this market's just tapped into an imbalance on a larger time frame. We've had a big push out here. Now think about this with our strategy. even if this was an indication on a larger time frame, if I go to 5 minutes or go to 15 minutes or whatever, maybe even if this is an indication breaking the last high before the lowest point, and it's just we've just seen it grab liquidity on a smaller time frame. Well, on a smaller time frame, we may be expecting a push down here. Let's have a look. I don't know. This ain't one I've made earlier, by the way. This is me doing it live, so I don't know. There may be no trade. This Wednesday, there may be no opportunity based upon this play that you can take. Let's see the market. Let's just play it forward. Let's just play it forward and see what it wants to do. They're still in that yellow box at the moment, and it's not very clear. All right. So the market's come back down here again. All right. Into this area, and now we need to try and work out what this market wants to do. When we pushed up here, it didn't take this liquidity level as compellingly as we wanted it to. It didn't. All right, let's have a look over here. Can we see what we want to see? Well, you know, it just didn't take that liquidity the way I wanted it to take. We've actually got some equal highs in here. We do have a breaker structure M in here. And we do have this imbalance over here, which is that candle that broke that structure. However, it's not very compelling, and we wouldn't have got in here. So maybe we missed out on a trade. We haven't lost any trades. We're just watching this market to see where and this structure wasn't clean enough, in my opinion. Wasn't clean in here for us to get entry for the buy. And wasn't clean enough here for us to get entry for the sell on a small time frame. Okay, so we're watching it still, and the market's come all the way back down into these levels and captured this liquidity that was below this line. All right, so we took this line. Now it's come up for the controller over here. We're still in our yellow box, and we're wondering, are we going to get what we're looking for? All right, are we going to get what we're looking for? I'm having a look. Now in here, I can see a break of structure manipulation W. It's small. It's the market coming in here, making a low, making a high, pushing down to here, coming back up here. Someone's saying, yeah, Jay, but these candles didn't close. Okay, we're not talking about the close. We're talking about something else of how this structure is. Because on a smaller time, if I was to drop down to my seconds, which I don't think it will give it to me, this will look like a clean breaker structure W. From here, up, down, up in here. For that reason, I'm very interested in this area here that broke this middle section, this level. I'm very interested in here. I might get egg on my face. I don't know. All right. But I've seen the liquidity being captured once again. And then I've seen a move away with strength and speed. And I'm wondering whether within this yellow session, even though it didn't happen right at the start, this is going to give me an entry. All right. I'm definitely managing my risk because this isn't the cleanest. Yeah, I'm managing my risk. So if I'm in at risking my $100 because I'm not quite where I need to be, then that's all I'm risking. Let's see what happens. We tapped into that area. We tapped in a bit aggressively, to be fair. All right, let's see. And we're gonna hit stop loss. That's fine. That's fine because this wasn't clean enough, to be perfectly honest. We wanna see a really strong take of liquidity. So now we're gonna zoom out. And you have to understand as well, when we're back testing, one thing you don't have the privy to is news. So maybe though we're here looking at it like that, in real life, if I was here looking at this at 9 and there was 9 o'clock news that came out on that day, maybe that wouldn't have been the best idea for me to get involved in that. As I don't know what news could have been. It could have been anything. FOMC could have been anything. All right. But what I am doing, have a look. Oops. What I am doing is I've gone, this liquidity is taken. This liquidity is taken. Sorry. This liquidity is taken. Oh, let's go again. This liquidity is taken. No, it doesn't. Just keep doing that. Either way. I'm thinking to myself, maybe this market wants to push on to grab some liquidity down here, meaning that this yellow box just gets bigger, becomes a bigger London session, bigger London range. But let me show you something. This is how I'm only looking at that one play, but understanding indication, correction, continuation would have had me looking at this trade here after it's broken my structure here and it didn't want to capture that liquidity and start pushing and go for the other liquidity. This is, it's a bit tight here on a 5-minute time frame, this closure. It's a bit tight on the 5-minute time frame, being below this low. All right, I was going to say this is an indication, this is a correction, and then this here, if this candle closes, is a continuation, possibly. All right, this closure here is on a 5-minute time frame I'm not over the moon about. So what have I just done? I've basically said, look, we was looking at an area of liquidity. That area, that zone failed. Fine, it failed. If we took that trade, we would have taken it out. We might have not taken that trade for various reasons, but if we did, we might have taken it out. That's cool, that's fine. But now if I see a closure, this only issue is, you see this closure here as an indication, it's not clean enough below here. It's not giving me that clean, think about our strategy, below this structure, indication, correction, it's not giving me that clean energy. It's right on the line here, which means that instead of this being the correction and continuation, this push now could just be the indication. So I'm a bit dubious about that. Let's play it forward, see what happens. Okay, so now we took that liquidity, the one I just deleted out of here, yeah? Now on the 5-minute time frame, I'm pretty interested in we've seen this liquidity being taken here. Indication, correction, continuation. I was a bit hasty on my 1-minute time frame. I thought it was done. It wasn't done. It captured the liquidity properly, pushed, legged out of here with a big manipulation W. I am very interested in this whole area in here. Remember, this is just London session in the morning. New York ain't even kicked off. Nothing. I'm interested in this whole area here, especially there's an imbalance, but especially as this is the candle that broke this structure here. All right. Now, is this market going to tap back in and start pushing up, capturing this liquidity? Remember the liquidity it didn't take over here? Is it going to happen? That's what I'm asking myself. I do not know. This is not one I made earlier. This is me doing it live in the mix. All right. Let's have a look. We're in. We have an entry. All right. That area of interest, and let's even drop down further. No, let me not even say we have an entry, because obviously I'm interested in down here and we haven't quite tapped in. No problem. Let's go and put in our level. Now I can see a smaller entry, but I'm going to mark them all out so you guys can see the success rate of aggressive, medium, and not so aggressive entries. What have I done? What have I done? I've accidentally pressed spacebar. Right, 1 second. GBP USD. I've accidentally pressed the spacebar, and now when I go back, are we still rewound? Are we still rewound? Oh my goodness! What a flop! 1 second. Yeah, I think we are still. Are we still rewound? Oh, I'm annoyed. I'm annoyed. Let me see. I think we are not rewound anymore. I accidentally pressed the spacebar, guys. If you press spacebar, it clicks to the next. Oh no, I haven't. It's not rewound. It's over here. It clicks to the next market that you have in your favorites. Okay. Oh yeah, I think we was here. I think we are here, all right? So the question I was trying to, oh look, you can see here that we didn't quite catch the entry. We didn't quite catch the entry because we was about here. And I was saying that, but what I would say is this. This is the area that was broken, right? I'm zooming in now. because to be perfectly honest, when I look at it, we did catch the entry. All right. No, we didn't catch the entry. It's very, very close. This is the area that was broken by this candle. This whole candle becomes an interest, i.e. that whole candle for the imbalance, if that was an aggressive entry, becomes the interest. This becomes the safer stop. This becomes that stop. And unfortunately, based upon Owanda's candles, have a look. I'm not going to take this wick as an entry. I was trying to claim it. I'll be honest with you, be real. This isn't going to trigger you in. Really, this should have come in here and tapped into this gap and then gone, and then gone, then gone. But it looks like it didn't do that. So it looks like we missed an entry by a whisker. Let me zoom out of here and look at something. 15 minute, 5 minute. Yeah, it looks like we missed that entry by a whisker. Can't lie to you. All right. So we've missed that entry, but look at it now. We're outside of our window. The market's gone and pushed up, captured this liquidity. Now look, nam, gone. Captured this liquidity, well, just about up in here, but we're outside of our window. We're no longer trading. We're chilling. We're waiting for New York. And let me put a line in here where New York is. It's about here. We're chilling. We're not trading. We've restricted our trading to this zone. We're no longer trading. Oh, but what we stop. But what we are looking at, have a look here, is when New York starts coming into play, which is just over here, and we see this market pushing up. I'm going to be looking for what I look for. So the market was pushing up bullishly, captured this liquidity, nam. Captured this liquidity, nam. I'm in front of my charts around this time anyway. We've seen the market pushing up into these levels here. I'm waiting I can drop my time frame down, but really I want to see how this market reacts now. And there's nothing to stop me from putting in my ranges. All right, putting in my ranges, understanding how the market's been moving, keeping my eye focused on how the market's been moving. Making higher highs, higher lows, higher highs, higher lows. At the moment, there ain't really nothing to say that this market wants to turn around. All right. Indication. All right. You've seen the indication of what this market may want to do. Let me drop my time frame down real quick. See if I've missed something. Okay. So I'm going to show you that I'm going to rewind. So the markets have just started New York, and then we see this scenario. It's quite small, it's quite advanced, all right? I would have taken the trade, and you could take the trade as well, but it's quite quick, yeah? Now what it is this. New York kicks off and pushes up in here, and then creates a big manipulation M. Not a big one, but one that I can see. Up, down. Up, down, all the way to here. Because remember, that candle there was a big red candle at one point. Yeah? And therefore, I'm going to be in here looking from that candle imbalance in here to here. At a possible entry based upon our play, based upon understanding the volume coming into the market, yeah, at New York session. All right, now this is quite small, could take it, all right, could have been a trade that could have been taken. It's very aggressive because it's quite small, but this here, after capturing liquidity, and if I look back, let's have a look also back in time. Let's try and get some more data real quick. Have a look. It had just taken a previous Asian session high. Yeah? And a previous high also here for liquidity. See? So when I've seen that happen, now you can see the red lines. I've seen that as soon as New York kicks off, look, as soon as New York kicked off over here, the market ran and nam, took that liquidity, because it's all about liquidity. My thought process after taking liquidity is that maybe it wants to pack its bags to go on a journey somewhere. That's why New York, the volume there in New York, has allowed for that story to play out. It's only 4.4 pips. Let's just say 5 pips. So I'm thinking to myself, when this market taps back in here, we may get an entry of this market starting to turn around because of the liquidity has been taken. Market taps back in, market leaves. All right. So though this was quite small on the 1 minute time frame, I would have already had this liquidity marked out to the point where when it broke that liquidity, my alerts would start ringing, ding dong, ding dong. Then I see this form. Look, perfect M. Can you see? Perfect manipulation M within our New York session. So all this other stuff that was happening in and out of the session, I don't care. I've just showed you the London session. Then when the New York session, I'm back for action again. Beautiful. I've seen what I'm looking for within the session. I've seen it tap into there. Then the market is leaving me. Yeah, leaving me. You see a little bit of added volatility, but stop up above that. I would definitely put my stop above here. Only 4 pips. Yeah, and because of this, how messy this was here, I don't want to get involved in this little messy kind of gap in the market, etc. All right, but the market is gone. Yeah, this trade is now, approaching it being risk-free and approaching 1 to 3. Now, the question I'd be having right now, have a look. The opposing question is, there is liquidity. I'd be thinking to myself, this market is going for this liquidity, personally. So I'd be thinking, that would be a target for me. All right, let's see whether it does that or not. Who knows? Market got all the way down here, very close. Got all the way down to a 1 to 2.6. Let's see what the market's. I'm gonna hit play. All right, because this might be one of them ones where the market wants to consolidate first before turning around, but it didn't quite get to 1 to 3. So if you want to go by accurate rules all the way down, because we took this larger zone, this isn't risk-free yet, and we haven't taken our profits yet. If you want to go by this larger zone, if we went by the smaller zone, I can't go by the smaller zone. Yeah, I can't go in hindsight, so I'm not going to do that. All right, let's hit play. Yeah, it was ramping, and let me tell you why it was ramping over here. It was ramping over here because it made another break of structure manipulation M that it wanted to tap into. Let me show you. All right, look at the line chart. We made one here. We tapped into it and left. But when we left, we made another manipulation M over here. That for whatever reason, the market was like, we want to go and tap back in again. And that's exactly what it did. Yeah, it tapped in once, gave us a great entry over here. But when it gave us that entry, it made this same break of structure energy with displacement. Have a look at the displacement in the candle. See it? See the displacement? So you actually had 2 opportunities to get in here. There was one here also. Yeah, and then the market's gone. All right, so all good there. This one's playing out. This is one of those days where our trade played out. And we're now at 1 to 3. We've now rolled off 1.5%, 50% of our profits, and this is a completely risk-free trade. Now, my focus is on, are we going to break this structure here for previous area? And I'm going to zoom out and say, where is this liquidity? Well, I personally think a strong area of liquidity is here, and then moving down into these levels. So I'm at this point thinking to myself, we're getting to this target. See what happens. Delicious. Got to that target, wicked below it. The way this market's moving at this moment in time, we've now made a lower low, breaking structure. I'm expecting to see a lower high, and then to continue pushing down. So if I wanted to, bearing in mind I'm in there completely risk-free, I've already taken 1.5%, I'm just going to stay and rinse, because I think that maybe we're going to get back down. We've taken this liquidity now, lovely. We might get back down to here without stopping me out, because my stop's still up here. That's the benefit of being able to take partials. My stop is still up here. I haven't moved my stop. My stop's still here, completely risk-free. Let's see, even though I've taken my 1.5%, let's see if this market's going to give me more. Delicious. So yeah, Sorry. There we go. Yeah. We still going. So now this trade here is at a 1 to 6 trade. Now at this point in time, you got more profits on the table. Take what you want. Take what you want. Do what you want. Ultimately, we want to see if we can get it to a 1 to 10. But this is just an arbitrary number, 1 to 10. It's all about structure. It's not about we're just going to pick 1 to 10, and that's the number. Obviously, if you get to a 1 to 10, please take your money. Like, what are you going for? Yeah. But we have to look at this for structure. I'm looking at this now. I'm concerned that we've put. Well, I'm not concerned. We pushed past this little previous battlefield, which is great. When we got there initially, we had a little reaction, but we pushed past it. That's great. So I'm thinking to myself, this here with some strength and speed, maybe right now below these levels in this area, we may see some liquidity that might cause a reaction. But the way this is moving right now, I'm thinking to myself that maybe this market could get down to here. There's imbalance in here. And I'm very interested to see whether this market gets down here. So I'm going to be just holding my hat and enjoying the journey. Yeah, I'm risk-free. Let's see what happens. Wow. Yeah. Wow. Taking the imbalance, push past in here. This is all within our session. This is within New York still, I'm saying to you, we're still trading. So though we're not taking a new trade, the trade is still running and flowing. And in my opinion, if this trade has come down here, yeah, taking liquidity below here, I actually think this trade could be trying to run all the way down here to take the liquidity of the previous session London lows. That's what I think. And if I was in this trade risk-free, I'm just going to leave it now. Taking 1.5%, we're rolling. I'm just going to leave it. See if we can get to 1 to, in fact, I'm lying, because if we get to 1 to 10, we're done. We're not quite at 1 to 10, even though we took a higher, safer risk. We're at 1 to 9. Let's see if we get to a 1 to 10. One to 10, you're out of the trade. Take your money, please. Take your money. I actually think the market's going to come all the way down here. Take your money. It's 1 to 10. That would be 5% trade. You took 1.5% off the table, and then the rest of it ran, giving you a 5% trade. Guys, this isn't one I made earlier. This is just me back testing, moving the trade back a few days. Yeah, let's hit play, see where it finally ends up. What did I say? I said I feel like it's going to go for this liquidity down here. Why? Why? Because I can see strength and speed happening from here. I can see this being more of a draw. That's like you're going doing your supermarket sweep. You see a PlayStation, and at the corner of your eye, you see a flat screen, I don't know, Samsung TV. You're like, bro, I'm here now, innit? I'm a thief. I'm in here. I'm cleaning the store out. I'm definitely getting that flat screen TV. I'm here anyway. Yeah. So look, as that market came and took that liquidity, if I was still in that trade, I'm 100% out at this point in time, because it's captured some real liquidity now. And then I'm thinking to myself, on the flip side, what's it going to do? Whenever have a look. Where is it? Where did I write it down? After every new high or new low, I was supposed to put in there, we can expect the markets to retrace. I don't want to be in that retracement. I'm at 1 to 10. I'm not interested in the market kicking all the way back up here. Even if it continues to come down here, I'm not interested in getting involved, dragged back over here. I'm taking my money. This was a good example for us to go through this trade. And you can see that before initially, even though we don't know whether I would have taken that trade wherever it was, but even if we did, who cares? It's an L. That's why we manage our risk. We heard the podcaster talking the other day, says his win ratio is 5 out of 10. There you go, 5 out of 10. But if we manage our risk and be able to catch, this ultimately ended up as a 1 to 12 trade. So that means we took off 1.5%, 1 to 3, and then we had another 9, so 4.5. That's a 6% trade. 6% trade. And not trading some mad new techniques that man had never seen before, but trading this. Yeah, and this allows us to take trades every day. Like I said, my overall bias for this is I want to be in it for the sell. So let's hit play and see what happens. Oh, what a coinky dink. Look, after we took liquidity, look, boom. I don't want to be back up in here. Well, I'm at a 1 to 12. I'm going to sit in this trade till it kicks me back all the way down to a 1 to 4. Why? Why would I know when it takes liquidity, we have the chance of it retracing? Look at that retracement. I don't want to be involved in that. It's CAC. Yeah? I don't care the fact that it continued pushing down here. This is all in hindsight. You've got a 1 to 10, the same way this market kicked up to here. It could have kept going up in here. Decided it wants to consolidate. All right? So that doesn't matter. But we can see now, have a look. The market's taking liquidity. The market's in this little area here, again, taking liquidity from a how do I know that? Because I put these previous lines in here. All right? Now, not all liquidity is made equal, and we still have to take into consideration the direction of the market, which, look, the market is bearish. Where are we in the range? We're in the middle of a range. The market could go down, it could go up. This is the concern I'm having right now. If we were to put in some lines, which we're allowed to do, we look at the market like this. Think to also the area we're here. Maybe we're coming into, we're still like in the premium of this impulse, but we're kind of in the middle of this bigger yellow range. So yeah, we don't know. So all this still comes into play, but also understanding liquidity and understanding these little flexes, these key kill zones, yeah, and you know, and liquidity. All right, guys, 1 second, literally 1 second, and we'll finish up in a minute.
Could get out of debt. If that person did it, maybe I could do it. And without either hope or that kind of rock bottom moment, I don't think you're going to change.
We can stay here, get the shit kicked.
All right, sorry, can you hear me? Am I back? Can you hear me?
Yep, can hear you.
Great. All right. So, guys, this session has been recorded. All right. I do want you, if you feel that there was any value or something that you saw, to rewatch the session and try and understand for yourself. Look at it now, ramping. Try and understand for yourself of where is a good trade, where you would have gotten in, and what it is you're looking for. And even if it's just that one thing that you're looking for, if it's just that one thing you keep, that's it then. You just stay on the roof in your camouflage gear, waiting for that one thing. That's it. That's you. And whether or not somebody is going to turn around and be like, yeah, there's another sniper and he kills with 2 guns and a knife and he's a ninja and he sneaks up behind you and nobody, who cares? You're you, and I don't do none of those things, bro. I sit on the roof and I wait. I wait for man to step outside and go and smoke a fag, and then I take my shot. That's what I do. That still makes you #1 assassin in the planet. But you're just not into all the other stuff. Yeah? So even if you just learned that one thing, guys, there's no reason why you're not able to see these opportunities, take these trades. Now, right now, just giving you an update for me, for where GU is GU has come from a premium up here and traded down into a discount. And though I want to be bearish and I want to sell this market, I am concerned and I'm interested to see whether this market is going to be able to get down from this area here and, you know, break these levels. Yeah, we see a little bit of structuring here, because until this market gets and breaks these levels, this bigger blue Russian doll idea I have that we're right up in a premium here and that this market might start doing something else doesn't have no legs. It's just a theory. Okay, it's just a theory until it does that. Okay, oops. So at the moment, though we are pushing down within this range, something just happened. I don't know what I just did something. All right, let's just go where we currently are. Yes, let's see where we currently are. The market was pushing down within this white range. So right now, as we've pushed back up in here, 15, lost my bearings. Yeah, that's it. So we're coming towards this premium, this discounted area over here. Have a look. This is the range. We're not quite down in here, but that depends on how I've drawn it. I haven't drawn it that well, I'm sure. But the question is that, look, the market is currently trading within this high and this low. Now, within that high and this low and that low is where I take into consideration my understanding of the liquidity, especially when certain sessions are happening. You get me? So within that range, understanding, look, that's a premium up in here in this range, that's a discount, the market's pushed down in here, then I can see with my little indicator, the little separate sessions, that right now this market pushing up here has just done what? Captured Asian session liquidity. That's what it's just done just now, because this is up to speed now. It's taken Asian session liquidity. Where's the next bit of liquidity? Above here and here. If it goes and takes this one, it might as well take this other one here. It's doing supermarket sweep. It's not going to leave the control pads. If it takes the PlayStation, it's taking everything. All right. So, oops. So let me get rid of this. And this is what we can look at for the rest of the day. For anyone who is trading or wants to look at it in live, to potentially take a trade live. Let me get rid of all of this stuff. Trying. All right. Is what's happening right now is what I want to know. We've just taken liquidity from Asian session high. Drop my time frame down. Let's have a look. 5 minutes. Bearing in mind, I want to be in the sell. Potentially, we're in a premium of that impulse. I'm having a look on a 5 minute time frame. I can see some sort of breaker structure happening on a smaller level. Okay. We are still within our yellow range, our kill zones. Yeah. We are. Let me drop my time frame down to a 1 minute time frame. Let's have a look and see what's going on. I'm drawing some lines in here. For me right now, it hasn't done anything yet. Yeah, there's a potential right now. See, as the markets come up here, come down here, they might push up in here and then come down. We are quite close to this liquidity, so I'm watching it. We've taken this liquidity. Does it care? Is that enough for it to make its way and do it in the other direction on its journey? I don't know. Maybe it's a greedy market and it wants to push all the way up here and nam, eat all this stuff. Maybe by the time it gets up there, it's going to be New York session and it's going to make a beautiful break of structure manipulation M for me to be able to get in for the sell. Maybe it doesn't do that and it indicates corrects and continues and wants to continue pushing up to higher time frame liquidity. Maybe. But where's the next liquidity that I want to identify? Well, we do want to identify this. Why is this an area of interest? Because from here, boom, the market had strength and speed breaking previous structure. I cannot ignore this level here. I can also identify the London high, but I cannot ignore this level here. This is how you identify the difference in levels. This is boom. I can't ignore that. All right. Over here, boom. It's a little boom. Yeah. Yeah. Over here, ish. I wouldn't even say this is a boom because it didn't even break this structure. It kind of came down here and then thought about it. So like I said, if this pushes up here, it's not only taking this liquidity, it'll push past there in my opinion. Probably take this one. This one, boom, broke previous structure in here. So this area of liquidity is of interest to me. And if it comes up here, because this area is interest, it might as well take this one here also, because this is the real price. And again, this is a price also that broke some previous structure. So right now, what am I doing as a trader? I'm watching it. I'm reading and reacting because I do not know what it wants to do. I don't know. I only have these theories about what it may do. Yeah, so here we've got higher high, got higher low, got higher high. We've just taken Asian session liquidity. We can see it dancing around, but until it does what it's supposed to do, indication correction continue, breaks some structure, gives me a nice manipulation, M would be fantastic. Until it does that, I'm just lying on my chest with my bullets. Yeah, true my tobacco, old school army man. Yeah, camouflaged, just waiting. Guys, have an amazing day. I'm going to stop this session. For those of you who watched at home, like, subscribe, giving away.
Sorry to interrupt, Rob. Just a quick thing, quick update. There's a lot of red folder news. I wouldn't worry about that red folder news. Is tomorrow morning. We've got 3 of the 4 big central banks doing their interest rates here tomorrow and Thursday. We've got BOJ at 5 o'clock. Tomorrow morning. I believe they're going to be dovish. That means the yen is going to be weakened. And then we've got the Fed tomorrow at 7 p.m. And then we've got the Bank of England on Thursday at 12 lunchtime. Yeah. 3 of the 4 big central banks have their interest rates. That means that market's going to be very volatile from tomorrow morning early. If the BOJ is dovish, the yen will be sold off. Yeah, the Fed, they possibly will indicate they're going to cut interest rates in September. That means that's going to be buoyant to the market. It means the market will be bullish. Yeah, the US dollar will be weakened if that happens. The Bank of England, they say they may cut interest rates. If they do, the pound will be stronger. Yeah.
Question.
Go ahead.
No. Sorry. That was me just lining up what's happening next. Yeah, thank you. Great information in regards to that. Euro JPY is another one that I do like trading. So and so when you asked me earlier what I traded, it was US 30 to EJ. Now I'm really finding a home at G. Now this is when it comes to the markets, guys. What I found is this. I'm going to tell you from my own experience. You can trade any market, wherever there's an opportunity. You can do. But I'm going to say something. When you're trading multiple markets, or even if you're in trades and you've got multiple pairs going on, it messes with your mind because you're going to see something in one of them and then you're going to be looking for that comparison to what you're seeing in the other one. It's like very difficult to compartmentalize your brain that you're just looking at GU and all the market structure there, and you're looking at gold and all the market structure there, because unless you just set and forget the trade, meaning that you just walk away, you're going to start. It's just one more thing to think about. What I'm saying in a nutshell is there's no problems with just trading one thing. There is not an issue if you just decided to just trade one pair and that's the pair you trade. And yes, a lot of people like to go and say, yeah, I want to trade gold because it's so sexy, because gold moves so quickly, or they want to trade Bitcoin. But I'd say to you guys, whatever you trade, doesn't matter. Doesn't matter whether you got a 2 liter or a 3 liter. The reality is you're only trying to get up to 50. You can only drive a maximum of what? 30 miles per hour in London now, 50 miles per hour in London. So the point I'm making to you is you just want reliability. You don't necessarily like, yeah, that one does 0 to 200 in 3 seconds, bro. You're never getting to 200. You're never going to get that speed. Yeah? So GU's fast enough. EJ's fast enough. EU's fast enough. Even some of the slower pairs are fast enough. Don't worry about you just want to trade gold because it goes crazy. It's a bit of a fiend mentality, Like find a pair you're comfortable with, that you can see what you can see. Maybe do your back testing. Maybe you start seeing this very clean and clear in another setup, in another market. Maybe it's very clean. Maybe it's cleaner and clearer in EJ. Maybe it's cleaner and clearer in US 30. I don't know. But if you see, wherever you see it, you can dedicate yourself to that one market, and that one market can make you rich. You don't have to be trading absolutely everything known to man. All right. But guys, amazing day. Thank you for being here. Thank you for being able to listen in, give me a chance to express and see my strategy and see how we trade and explain it to yourself. Practice. I had a conversation with somebody who says that they're getting they're funded. And as I said, bro, stay small, trade this, do this strategy here, which I think is really important, this one here. Look, the risk management rules when you're trying to do a prop firm challenge. I think you want to try and, be very conservative. Only if and this is a 100K example. If you had a 100K example, you should be trading $100 risk at a time until you are profitable. Yeah, until you get your account to be, 101,000. If you get to 101,000 and you're very, you're taking a series of good trades and you understand Wagwan, at that point in time, if you really want to go in, you can trade 1% of your principal, the original amount. So you can risk $1,000. But if you lose that trade and go back negative, or go back to 100K, you're $100 again. Yeah, this just allows you to do the challenge quicker, and puts in some risk protocol for if things are not going your way. All right. But yeah, that's about that, guys. Amazing day. I don't know if someone's going to say something. If you was, go for it. What I'm going to put on is a Forex podcast about a guy, I don't know, it says expert Forex trader reveals habits for boosting income. Like I said to you, a lot of the time, guys, I'm just playing these podcasts. I don't know. I'm evaluating the same time you're evaluating. So I'm going to put that one, play this one here, and I'm going to stop the live session, like and subscribe and share and all that goody stuff. All right, giving away source every morning, showing people, showing the family, ways in which they can get into the markets, but practical, doing it live in front of you. This morning I took a 1 to 10 trade that I broke down, and then I did it twice, back testing, doing the exact same strategy. Some was a little bit less clean than others. And if that was a real life scenario that you decided to not take it because you didn't like the setup, then good for you. Good for you.
Just being selfish, right?
There's no reason why you have to feel that you have to FOMO into every trade.